from yours one and only Aussie. I don't know music for. Good day, guys. How are you? I am excited, boy. I am excited. I am happy I get to share this with you guys today. Now, this is going to be a pretty short video of market movements to avoid. So, guys, I've already highlighted some few things for you guys here. We going to be taking a look at USD Chef and seeing what type of market movements you should avoid, and I'll also give you a bonus of market movements to partake in. So, guys, you need to know as a trader, according to your trading plan, that okay, this type of market I don't want to be in when a market is doing such and such, such and such, such and such, such and such. And also, I also don't want to be in a market that's not trending. I want to be in a market that's trending. Excuse me for that. I want to be in a market that's trending. And if a market is trending, I have to be there with a live account with money, So I'm going to give you a tip. I know from my experience. Let me show you something quickly. Right now, the areas highlighted in red are the areas you should avoid, right? So from my trading experience, right, it would happen that because of I'm not a funded trader, so I traded money. I literally gross myself. So it would happen that I have a trading account, a live one, right? Of course, you have your strategies. I put in my trend lines and support and resistance and all that. Now the trend is down for this market, right? And we probably get at this level right here. And I sell, right? Now I would sell in this market, and look at how many days I would have to hold. Show you. It's December. Let's do that. The market literally wasn't going anywhere. I'd have to sell, hold that long, think that it'll impulse down, only to wake up at a break even. So, is it really worth your time to be trading such markets? No, it's not. It's not, because of you literally had what 7 days of waiting until you were at break even. Couldn't you do more with your time than to be emotionally attached to a trade? Because of I know the longer it takes, the more it will take your heart and your interest into one trade. So it would happen that I do that, and I wait and I wait and I wait. Maybe I add a few positions, and that would have ended up bad for me as a trader, So I learned to avoid such markets because of trading them. By the time the market starts trending and movements like this, you don't have an account by the time. Most of the time, I don't know if it's familiar with some other people, but that's what happens with me. What happened with me, of course, in the past, now that I've found my success. So into the green area highlighted there, by the time the market gets there, you find that you've been doing the same thing over and over, trying to trade this market that's untradeable, which is in a range. And by the time the market gets here and is doing proper impulse moves, you don't have an account, and you think that the trading, the market makers, as they call them, are against you. Well, that's not the case. You need to figure a way in which you want to be trading trends. How do you know trends? The market doesn't have a clash of candlesticks like we see right now. We had a surge impulse up. Man, surge impulse up, and you could have looked for trades right here, created a support, nice support, got an impulse up. So by my understanding, that's a nice, it's probably 60 pips, and bam, like that. That's how you make money off the charts, trading impulse markets and finding opportunities in markets that are impulsing. Now, if you want to do this, keep on doing it. Trading markets with a lot of clutter. Look at this. There was no movement. Why would you be looking for a trade right there? Why? Again, after this impulse, we had a range right here. What I'll do in the old me is that I would go again, stack trades, be emotionally involved, increase lot sizes. I know the story is familiar, and by the time the market is impulsing again, man, are we missing out or what? By the time the market does impulse like that, goes up, where are you? With nowhere to be found, with no account. So right now, I'm giving you insights, guys, into type of markets you should avoid. For those of you, some of you want to be taking screenshots of this, do so. That's how it works. Trade a market that's not ranging. It should be consistently creating impulsive higher highs, higher lows, or lower highs and lower lows for you to be trading it. You see, here's another example in red. You don't trade a ranging market. How do you see a ranging market? It is a lot of cluster candlesticks going nowhere for many hours. Save your time. Go analyze another pair. That's it from you guys. It's a small tip. For those of you who want to use it, trust me, you'll be grateful of it. Be sure, guys, to comment and give input of what you also noted as traders. Your input is valuable to us, and man, guys, I just love my job. I get excited, and I also love to learn. So I don't take away the learning part whereby I'm ignorant to things I should learn. These are the things you should avoid. I share this information from real-time experiences with real money. So be sure to use them. Tell me what you think. And cheers, guys.